One question we're often asked by realtors, foreign clients, and foreign investors is what is FIRPTA? And every now and then, even domestic clients ask about FIRPTA because they are concerned about purchasing real properties from foreign nationals. And that is why today I want to share 5 things you need to know about FIRPTA, the Foreign Investment in Real Property Tax Act. Hi, my name is Andrea Aguilar, and I am a tax attorney at Counsel, a boutique planning firm in Miami, Florida, dedicated to helping global families and businesses protect their assets and leave a legacy. Well, before I begin, I just want to mention that foreign persons must pay U.S. taxes on gains realized when they transfer real property interests. And to make sure that they comply with this rule, FIRPTA imposes a withholding obligation. So number 1 of the 5 things you need to know about FIRPTA. FIRPTA applies whenever there is a disposition of a U.S. real property interest by a foreign person. And when I say disposition, I am referring not only to the sale of real properties, but also to liquidations, redemptions, capital contributions, or donations where real properties are transferred. Also, there must be a transfer of a U.S. real property interest. And this interest may consist of direct ownership of a piece of real property or ownership of an interest in entities that own real properties. And finally, when I say foreign persons, I'm talking about human persons, of course, but also foreign entities, foreign trusts, foreign estates, and so on. Number 2, FIRPTA imposes a withholding obligation on the transferee. And generally, it requires that the transferee retain 15% of the amount realized in the transaction. And this amount realized is calculated by adding the cash paid in the transaction, the fair market value of other properties transferred, and any amount of liability assumed by the transferee. But let me briefly show you how FIRPTA works in a case of a sale. So when a foreign person sells a real estate, 15% of the purchase price is held back and sent to the IRS to pay potential tax liabilities. But if there is no tax liability, the IRS will hold this advance tax payment until the seller files a tax return showing the amount he actually owes. Now, number 3. There are exceptions to the FIRPTA withholding requirement, and I am going to just mention a few. FIRPTA will not apply if the transferor presents a certificate or a statement saying that he is not a foreign person. And this may be possible because a foreign person may have become a U.S. tax resident for income taxes. If you want to learn more about this, please watch our video about income tax residency following the link in the description below. Another exception is the residential exception, and here the transferee must be an individual, must have definite plans to reside in the property for a certain number of days, and the amount realized must generally not exceed $300,000. But counting these days and talking more about this exception may take more time, so we're going to prepare another video to talk about this. Another exception that I want to mention here is when the amount realized on the transfer is 0, as in the case of a gift, for example. Now, number 4, even if FIRPTA applies, you may still be able to request a withholding certificate. Because if the IRS issues a withholding certificate, the amount which must be withheld by a buyer can be reduced or eliminated. And this is possible because the amount to be withheld should not exceed the seller's maximum tax liability. And finally, number 5. FIRPTA requires the foreign person to have a taxpayer identification number. And because generally foreign persons do not have social security numbers, they will have to apply for an ITIN. To conclude, I just want to mention that there are ways to structure an investment to avoid dealing with FIRPTA altogether, but the right type of structure will depend on your unique circumstances. So for that reason, it is important that you contact a tax professional to guide you on this. Thanks for watching. Please like, comment, and share this video. And remember, great families plan for great futures. Who are you planning for?